on the latest market developments, we are joined now by Portfolio Manager Phaswane Mphahlele. Thank you so much, as always, for your time. Do tell us about the latest geopolitical developments, how they've impacted global market trade on the first day of this new week where trade is concerned.
Evening, everyone. Looking at the headlines from last week about Iran and Israel and expected escalations in their geopolitical tensions, investors were really on the cautionary side as they bought into a lot of dollar, silver, gold, and oil, and which has held a lot of commodity stocks. However, because market was really worried about this, I mean, we actually even saw some of the CDFs in Israel ticking up, reflecting their worry. But over the weekend, how much we've seen Iran's attack and then Israel containing them with support of the likes of the US and the Iran mentioning that they are not willing to even take it any further because they are fine at this point in time. There's been some sense of relief because we saw some of the markets in the morning have traded higher. However, now generally are just mixed, and with the likes of oil having to be even lower below 90 has given some sense of relief. And the markets right now, they remain worried about geopolitical tensions. But I think right now the trend is going to go back to the macroeconomic issues at hand.
Here at home, though, trade on the JSE has been described as producing wild numbers with paper beating cement. Talk us through that development.
You know, when we look at that, the commentary around that, it's just basically highlighting how the JSE and its listed stocks have quite some surprising development and imbalances. I mean, when we talk of the paper versus cement, they're talking about how the companies that are involved in the cement or the construction sector, which are around about 10, 11, are equal in value to one paper company. And the imbalances comes at the back of the fact that we have seen the likes of the construction sector having not done very well. Whether we can take it back as COVID-19, where they saw some of the negative impact on the supply chains. Let's add on some of that construction mafia attacks that has increased the cost of business, and then there's seen businesses losing some confidence, investors losing confidence. Money flow investment has been rather weaker, and when you top the effect of inflation and how it's harming the general margins, there's just therefore seen a lot of underperformance, and the lack of investment, government projects around infrastructure has really hurt that sector and those companies in value, and that's what we're seeing in the likes of today, which they were generally doing better. Back then, before pre-2020, they were doing better, but right now, the value of 10 is equal to the value of 1, around 33 billion. Surprising, but it's also a highlight to investors that you must always analyze, understand markets before you take a step in, or just be safer, take on to buy the market in general, or alternatively speak to an expert of note.
Absolutely, and we must talk about this next one where it's noted that the rand doesn't always represent reality. Talk us through the context there and the dynamics along with the local units, emerging market peers, how they've performed throughout the global developments that we've seen so far.
You know, when research has been said, the rand, the currency generally quite do well to present what is the true reflection of a country. It just tends to people taking a certain perception and then putting it against it. So let's just look at the rand and the currency. The currencies just generally reflect the perception of the market in terms of, for instance, South Africa's economics and South Africa's political stability or its future prospects. So it goes down back to the demand of supply, where people needing the currency in general. And most of these transactions happen outside the currency. So taking a specific attributing factor such as a political event or political development and linking it to a movement of a currency is just not necessarily a full reflection of why the currency did move, and therefore can be seen as oversimplified, misleading, because the forex market is quite a complex market, and therefore it is a better way on doing it in order to give a full transparent story is to take a more holistic view around it, and therefore you can get paid on that. And just looking at the rand in general, then we are looking at a performance for the day that is now weakened. It's seen the rand has weakened from to over 19 rand, and this is at the back of relative to the dollar. the rand, the dollar has strengthened at the back of positive economic data that has come out. We've seen the retail sales have been better than expected. And when you look at the rand, they've lost some of the momentum they've been gaining from the commodity prices because they've eased down because of the escalation. And when you look in general, the investors are just in general in more demand of the dollar, whether you look at inflation concerns or concerns around rate cuts. Meanwhile, the demand of South Africa is not so much, especially when we have overhanging things like the upcoming election in May.
You touched on commodities. We have to talk about the so-called safe haven. It's proving to be exactly that for almost going on 3 weeks now, Phaswane. And here we're talking about gold. What's the latest around the precious metal?
Looking into the precious metal, the yellow metal, gold, we've seen coming from last week, it hit an all-time high of past 2,400 up 2%. But coming in today's trade and seeing how the de-escalation took place, the metal was contained from a geopolitical sense. The gold is just has lost some of those gains and is just up slightly around 0.3% to around $2,350 an ounce, and it remains very bullish. And the demand is just currently seeing, even though it's a small bit, it's just at the back of the fact that investors still worry about geopolitical issues. But however, investors are just getting into the yellow metal because they're trying to benefit from the higher for longer environment that is taking place from a macro sense. Meanwhile, the likes of oil, they were slightly weaker, below 90 rand. And when we just look at commodities in general, we're looking at a trend where the commodities continue to do well, all thanks to the like of copper that are still going higher today, silver going higher today. The likes of oil and gold have eased but haven't lost all their gains. And when we look at some of those some of the food such as coffee and cocoa, they're doing quite well, and it's helping the commodities to be a place where you can get paid in this kind of environment. And therefore whether you look at it from a sense of having inflation expectation higher, or looking at the fact that from a mathematical standpoint, rate of change, base effects of inflation data that will be coming in, commodities is probably going to continue to be fairly much better to some of the other asset classes. And therefore, that's why then you can argue that whether rates will be cut or not, or another war, unfortunately, might break out or not, commodities is probably a nice cushion to have.
You spoke of inflation, and we have to talk about it as a parting shot because come Wednesday, the Stats SA will be telling the rest of us here at home what our latest CPI print is, of course, after it rose to 5.6%, which is way too close to the higher echelon of the 3 to 6% target range of the Reserve Bank.
Yeah, looking at inflation, we're going to get that data later in the week. Expectations are leaning towards a slight decrease from the previous print in February of 5.6, but will be heavily overweight. It will be the print should remain strongly above 5%, and this is at the back of the fact that when we look at whether you look at it will be driven by the fact that we have seen higher oil prices, we've seen higher food prices, especially the ones we actually bring into the country. We've seen demand in terms of housing and utility things going higher, and with a currency that was weaker during that period, inflation should remain elevated, and that implications on that in terms of monetary policy continue to see Mr. Kganyago remaining very firm on being hawkish.
Thank you, as always, for your contribution. Phaswane Mphahlele is a portfolio manager with Market Fund Managers, talking us through the latest market developments.